Welcome back, everybody. And this is going to be the watch list for Monday, July 29th, of which we are going to be heading into a very pivotal week for the actual markets. And there's a couple reasons for that. But before I get into that, what I want to talk about is what you're seeing and the volatility that you're experiencing today, which has created a very challenging environment for the majority of all traders. And the reason for that is twofold. One, as I've stated several weeks ago, volume drops significantly during the summer months. So there's not a lot of bidders to smooth out the auction process, right? I've outlined this a multitude of times. So how do you combat that? You have to drop your position size. So if you're accustomed to trading 10 contracts, you should probably be trading half that, 5 contracts. The other thing that's up in arms or up in play right now is government politics. And it has to do all over the change in presidential nominees on the Democratic side of the aisle. So why is that important? Well, couplefold. It will tilt the election one way versus another, depending upon how the candidates start to pick up steam from this point forward. So it's kind of like we're resetting the table for a completely different outcome. Now, depending upon who wins the election, you will see certain stocks race higher and you will see certain stocks drop lower, depending upon the candidate and their policy, right? A lot of it is going to have to do around energy. So you're going to want to watch the refiners in the oil companies. The other one will be pharmaceuticals. So how do they look at Medicare, Medicaid, health insurance, drug costs, so on and so forth. The next one will be your financial service sector. How do they look at the banks? Do they see easing regulatory oversight or increasing regulatory oversight? So a lot of what's going on in the market now is being driven by a low amount of volume and a significant amount of uncertainty. So the other thing that I've noticed too is taking a trade within the first 15 minutes is now more like gambling. And for those of you that are trading the market every day, you are just seeing crazy volatility. It goes to the pre-market high, drops to the pre-market low, back to the pre-market high, back to the pre-market low. And it's taking the market a while to settle in to find its cadence. So I would be overly patient about getting into a trade. And we're going to look at some stocks together as to how I'm going to be watching the markets and the way that I've been playing it. But first and foremost, 2 significant events that are happening this week. Monday, you should be clear to trade. Nothing is scheduled from a news event perspective. Tuesday, I don't really have any concerns around these. Home price index, we know housing is still expensive. I don't expect that to drop much. Consumer confidence is still resoundingly high. So I don't think that that's going to drop off the face of the earth and shake the markets. So I think you're good. Job openings should be pretty much muted as well. I think the economy is on a very stable footing and things are still progressing quite strong. Now, what are you going to want to watch? Wednesday. So Wednesday, as you guys know, is a no trade day. Well, at least it's a no trade morning. That's my recommendation. That's my advice. Why? Because it's FOMC day. And while the Fed is not expected to lower interest rates, it's going to be the commentary. And why is that important? Well, right now the market has a rate cut baked in at 100% certainty for September. Now, if Jerome Powell comes out and says, nope, we're not certain September is going to be our target month, you're going to see this market start to pull in and sell off because right now Wall Street has a 100% prediction that they are going to lower rates in September. And this is the dangerous thing, right? With how Wall Street starts to front run the Fed. So pay attention to that. After Wednesday, you'll get more clearance and guidance. It'll be much easier to trade on Thursday and Friday. A couple things that you're going to have before the bell is going to be jobless claims, U.S. productivity. While the market is open, ISM manufacturing is always one to watch. And then on Friday, you'll get the U.S. unemployment rate. Again, predictions are, and where it's been holding steady, but it's been now above 4%. So could that be a little concerning that the market's starting to cool off? So it's a give and take, right? The market wants rates lower, but the only way you get lower rates is when the economy doesn't do well, right? They lower the rates to juice the economy, to get more spending, to get more hiring, to create more jobs. So this is what we have on the economic news calendar. Now, the second piece that I was talking about that I do want to look at are earnings. So the other thing that's been jolting this market are earnings. So when Tesla and Google missed earnings last week, it was a very violent reaction to the downside. Why is that? Well, it's because tech is up so much. When you look at it, that it's still clipping at 30, 40, 50, some 100% return year to date, people don't want to leave money on the table in a violent downturn. So a couple of the stocks that I'd be watching this week, first one is going to be McDonald's. What is that going to have to do with anything? Well, it's going to have to do with inflation, right? And consumer sentiment. So we'll take a look at their chart. I would also be watching Starbucks. That's another one that has gotten hammered in the past. Our next one is going to be Boeing. I think Boeing will have a lot to do with orders, pre-orders, overall consumer travel and spending. Meta, definitely, we're going to want to watch Meta, as well as Amazon, Apple, and then on Friday, we're going to want to watch ExxonMobil and Chevron. So what you're also seeing in the market now is a shift amongst sectors, right? They are coming out of consumer cyclicals. So if you look at what's happened to McDonald's, Starbucks, Nike, Lululemon, they've gotten trashed over the last 60 days. I mean, it's amazing how much they just said, nope, we're out of this. The consumer is slowing down. Their spending is running out. Where are we running to? Right now, they've been running to the banks. Is that going to continue? I don't know. I start to look at the banks and they're now at 52-week highs. Some of the banks are at all-time highs. Whereas there may be some opportunity, I'm going to believe in the oil sector. So I would definitely be watching an ExxonMobil, an Oxy Petroleum, I think are really good. The OIH index is going to be another one. So let's get into some of the charts. As you know, I always like to start with the SPY and QQQ, so we'll take a look at that. Two things you're going to want to be cognizant of is still the gap fill. I did talk about this last week. Now, mind you, there is a very, very tiny gap fill right here to the downside, right? When we saw a sell-off on Thursday, this was a great opportunity that once the market started to push into the gap, which it was significantly bigger, right? That should have been a great cue to go short. Now, it's still there. What am I also eyeing, though, is that there is a larger gap fill to the upside. So the smaller the gap fill, the less intensity you're going to see for the market to chase it from liquidity. Now, what did we do Friday? We pushed up, we sold off. Thursday, we pushed up, we sold off. So there's still some nervousness within the market. You're not getting this huge follow through. Let's go ahead and take a look at this on the 1 hour time frame and see where we're at. Again, I usually go back. People ask, how far back do you go when you look at the charts, Bill? Well, a couple things. One, I'm going to look at the ranges, like right where are we at? So on the downside, a couple things that I'm going to be paying attention to is if we break this gap, where do I want to be just aware of the market from a sentiment perspective? And it's going to be right around here at this 533 level, right? We rejected it. We push up again. We kind of use it as support before we push higher and then to the upside. What would I be watching moving up? Well, again, we're kind of trading between these two gaps, which we'll want to be cognizant of. We got quite a ways to go to push to this next pivot high all the way up here. So, I'm not going to, be too concerned about that unless, Jerome Powell comes out and says, I'm lowering rates right now. If he says we're lowering rates today, you will probably fill this gap in a heartbeat and push all the way up to this 556. So again, it's not about does he raise or lower rates entirely. it's going to be the commentary that you're going to want to listen to. So let's go down and really see where's the risk to the downside. Well, as I said before, I think the risk to the downside is going to be this 533. Other than that, I think we could ultimately, if it really is, not positive news, I would look to go all the way down to a bit of a lower time frame. Why is that not want to stick for me this morning? Let's try that again. There we go. Down here to 519. Now there's going to be some stops in between, but this is on a very high level. So I wouldn't bother charting in this environment. Really the 30-minute or the 15-minute. I do take my trade entries off of 5-minute and 1 minutes. So what does that mean? Well, what I'm going to do is I'm going to take a look at the 5-minute just to see, are there any levels that I want to be aware of? And so what I've been doing most recently is I will take the prior day's market high and the prior day's market low. Okay, where are we at with that? You'll note that as we pushed up on Friday to Thursday's prior market high, you started to get a sell-off. The other thing that I would do is I would be watching what is the pre-market high of the overnight before the market opens and what is the pre-market low. I'm not going to watch what's happening after hours. I watch what happens in the morning. So this black box is the after hours. This brown box is the morning of. And if you note, once you get to a 1 minute time frame, you are then literally just trading level to level. So what did we do on Friday? The market opens. We did not push down to the pre-market low, so there's no trade. We didn't push up to the pre-market high, so there's no trade. Where many of you are getting burned is you're trying to figure out what's going on between the levels. You have to be so much more patient. Right now, until you got to 30 minutes into the market day, from my opinion, there was really no trade to be had, right? I mean, the market wasn't confirming anything. You're just chopping, trading in a range. Now, what could have happened here is once you got above the pre-market high with some volume, right? So when it actually touched it and started to reject it, the next candle was significant volume. You had good follow through. So this would have been a signal that you could go long. Now, what did the market do? It automatically reversed it and it pushed it right back down. You probably would have had to have waited for a close below this candle to actually exit the trade, which unfortunately would have been a loser. But the probability of it being a winner was 80%. So this is going to be the 20% of the time that it just isn't going to work out. And then what does the market do? It pushes back up, rejects, pushes back up, and then finally breaks through it. I will tell you that when you see it pushing, coming down, pushing, coming down, pushing, coming down, the more touches you're getting, then that just tells you it's a very strong level. So once you can eventually break the level after 4 or 5 touches, then you're now getting a run to the upside. And where did it run to? It ran to yesterday's high, right? Now remember, these are areas of interest. So if I'm thinking about, okay, well, what is the actual level that I want to watch? Let's show you how I would literally draw the overall supply up here. What you're going to do is you're going to take, you have a green candle, you have a red bearish engulfing. You're going to go from the green candle low to the high, and you're going to drag it over to the right, and this should actually be red. So let me change that. There we go. Let me move it over, and you'll be able to see this in a second. And where did it reject? Let's go in a little closer. Right there, at the very bottom of the overall supply from the prior day. Okay, so this would have been a phenomenal short. And then where do we start to push down to? The pre-market high. And then where do we go from there? We just kind of chop around before the market closed. So this is why patience pays. You have to watch your time frames and your levels on a higher, broader perspective in this market versus just trying to catch a falling knife. So let's take a look at QQQ real quick. Let's see what that's doing on a daily. Move this over. Definitely more volatility here. Again, Tesla really took this thing down. It's had a little bit of a recovery, but SPY is holding up much better. So let's take a look. What do we got here? We have a gap fill all the way up here. We have another gap fill right here. So definitely you can see the market is gapping down. Well, what does that tell you? Is that there is weakness, right? Let's look at this. Red, 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 red. 1, 2, 3 green candles over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So 70% of the days are actually red. Now, I told you we have Meta, Amazon, Apple coming out this week with earnings. If they miss, they could definitely be pushing this market significantly lower. Okay, so let's take a look at it on a 1 hour time frame. See what we got here. Where would I be watching for overall price levels from a pivot perspective? On the pivots, you'll note right in here, look at all this consolidation. So we had a pivot high, push down, consolidate, 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 and we're holding this consolidation level. If we break and hold below the 460, which again, nice round number, I definitely think that you have way more room to the downside where you can be pushing down into the 450s. Okay, so that's where I would be looking to go short on a break and hold below 460. Let's just take a look at this a little bit on a lower time frame. And you can see we've been holding this for months. So that's why I think that this is a very important level for us to be able to maintain on a go-forward basis. Same exact thing, when I'm trading on Friday, what am I doing? Again, I'm just watching the past couple days. I'm not going way back, but something very similar. So let's just do this. The high from Thursday and then the low from Thursday, that was a real significant sell-off. And then what did the pre-market do? So my pre-market was here. My pre-market low, ironically, is the same pivot that I pulled from all the way back to the left, which is why, again, we look left when we're setting levels. Now, Friday was really challenging to trade. I think I shared on my LinkedIn post that I ended up getting stopped out of my trade. I made money on SPY, and I lost 2 red trades on the Qs. So therefore, I was done trading for the day. Now, why did that happen? Again, this extreme volatility. We are trading in a range, right? This one, even on a 1 minute, was very challenging to manage. So unfortunately, it's why we have rules, and then you just have to call it quits. So unfortunate as it was, just kind of how things played out. But you could see once we were able to hold this 461.50 level for a period of time, we moved back up to the pre-market high. Then we got above it, kind of chopped. And then once we failed below it, it pushed down and into the market. Close, went right back down to that prior pivot from weeks ago. So it's good to keep your lines on your charts until they're actually broken or they go away. That's one of the other questions I'm asked all the time is, Bill, when do you remove a line? When do you remove supply or demand? Well, you remove supply or demand as soon as it's broke, right? But then my overall lines can actually stay on the charts until you get so far to the upside or so far to the downside. So let's look at a couple. Let's look at the couple individual names. So Let's take a look at Meta. I'm going to do this on the daily. Bring this in a bit. Okay, there we go. You can see first thing that I noticed, above all else, looks like we got a gap fill here. So if Meta has really bad earnings and this thing pushes down, I think you're definitely going back down to this gap fill of, looks like somewhere between 406 and 413. Now, conversely, they also have a gap fill to the upside. So right here is something that we're also going to want to be cognizant of. Again, I probably would not be playing any of these technology names until after they do their earnings announcements. Let's take a look at it on a 1 hour. You can see we are trending down. So what I would watch for this one is a push up to the gap fill and then a reject lower. There's going to be a lot of volatility in the market this week, so these are definitely going to be harder to trade. You can just see the sporadicness of it. If you find a day that's really weak with the Qs or a day that's really weak with SPY, then you could jump into the individual names. But you can see here there was really no opportunity to make money, right? From Thursday to Friday, they're just waiting for earnings to come out. Apple, let's take a look at Apple. It's doing the exact same thing, a little bit more range, which is a good thing to see. So let's take a look at this just on the 1 hour. Again, what I don't like is that you're just building yourself into this wedge. So watch this. And let's get this to stick. Okay. And looking for a couple touch points. So you're building yourself into this apex, and it's going to resolve itself one way or the other, to the upside or to the downside. So when do you decide to do that? My take is I'd probably be waiting for news to be released. But again, you could always take this trade on the break above or break below. We're already here. We're consolidating in between. So until you see a decisive move one way or the other, again, I probably would not be trading some of these technology stocks. I fear that you're just going to get caught up in the overall chop. Again, huge indecisiveness. This is not what we like to trade. This is not what we want to see. So I would, again, my advice, steer clear of the Qs, steer clear of the tech stocks until we get some more further guidance. I would definitely be looking to play the SPY, which is going to have just a better smoothing mechanism. And as you can see, better levels to trade. So what's going to be my plan for Monday morning? Well, here's the good thing, right? This can go away. This one here can go away. This stays. This is still supply. I mean, till they break above this, this stays right here. It doesn't go anywhere. What am I going to want to be cognizant of? Well, yesterday's high was here, so which is my supply level. So no surprise there. And then where was my overall market low? It was all the way down here. So now you have this really wide trading range. I would not try to do anything until we can get some clear decisiveness for which way this is going to move one way or the other. Let me just turn on the supply and demand indicator just so you can kind of see where we're at. And this is a great example. So you have buyers down here, which we know on the 2 hour. We have all these sellers up here, which are, again, on the 3 hour. So this is why it's so hard to trade the market between zones. Buyers and sellers are equal. It's a push-pull. What you want to see is you want to see where the sellers are all the way up here and the buyers are all the way down here. And then therefore, you have a range to trade in where you're going to get movement. Here, you're just getting equality. And when the market is equal, that's when you get the chop like this. So hopefully that was helpful. Took a little bit of a different approach today, and I definitely took a lot more time than normal. But I want to see you preserve capital and lead with risk management. So definitely being more patient, taking time, and just waiting for the market to push back up here and reject, or come down here and then find momentum to the upside. But if the market opens at 544, 545, 543, right now you don't have a trade unless something happens in the overnight tomorrow morning where there's news, which there's no news scheduled for Monday, so that probably isn't going to happen. Or you get earnings from a company that's really going to fuel the market higher or lower. So those are some things I'd be keeping an eye on. And as always, if I can help, feel free to reach out. Have a great Sunday, and we'll all talk soon.